the last thing I just wanted to ask you, Tristan, is that if you look at the Bitcoin mining industry as a whole, so forget about Bitfarm specifically, just looking at all of them combined, Mara, CleanSpark, Iron, whatever. Um, and of course, Bitfarms is in that group too. If you just look at the mining industry comparatively, it has vastly underperformed MicroStrategy, and I think it's even compared to spot Bitcoin. A lot of the times, it has not done as well as spot. So, with that being said, what do you think? Do you think what do you think of all this? Do you think Bitcoin mining is a dead industry, or like why are the miners not performing like the proxy that we expected them that they would be, right? Because when I first got into miners, I kind of was expecting what MicroStrategy was to Bitcoin, but I was expecting that for the miners too. Not that it was bearish on MicroStrategy, but I was just saying like, hey, like if MicroStrategy can do like a 2x multiplier on Bitcoin, then maybe the miners will be like a 3x. But that hasn't been the case. So, like, is mining dead, or like, what's wrong with the mining industry as a whole, and why is it not just kind of keeping pace with spot Bitcoin? Even never mind something like a MicroStrategy. So, what do you think about that, Tristan?
Yeah, so mining is a different ball game than MicroStrategy, for example, because mining is it's something where all of these companies have a much lower market cap than something like than like MicroStrategy does or has in the past. So the ability for the stock prices to move significantly with Bitcoin is something where they can move the stock price significantly more because of a smaller amount of capital than for MicroStrategy, for example. But the real seller for the Bitcoin miners, in my perspective, is not actually is not actually their ability to track Bitcoin. They actually are kind of a terrible tracker of Bitcoin in general because they tend to flow in and out of kind of extreme overvalue and then extreme undervalue. So they kind of exist in a space where the market just never knows how to price them because of the fact that the revenue is tied to such a volatile asset that they can release a mining report and the market goes, OMG, you guys have made so much money. I need to crank that stock price to the moon. Or the market just completely doesn't notice them sometimes. And because of that, you have an opportunity here to kind of play that disconnect where, Bitcoin is going up. The miners haven't gone up. Why haven't the miners gone up? Well, the market doesn't know what to do with them currently. But when the market figures out what to do with them, they move and they move big. So that's really what makes the miners so appealing, is because that people figure out at some point, people clue in that the if gold is good, the guys who get the gold are also pretty good. So they aren't something where you want to hold it a ton of time comparatively to like Bitcoin. From my perspective, if you buy Bitcoin now, like you probably want to hold it for a long time, right? Just in general, unless you're going to sell it and then buy it back at a later date kind of vibe. Like, so for example, if you were selling it at the peak, but like with the miners, they're considerably more volatile, and when the market figures out basically that the miners are going to be going up because of Bitcoin, and that we get kind of those reports where everyone has got like, holy, miners made like $105 million this month in Bitcoin mining from Bitcoin. Like, people suddenly get the dollar sign in their eyes, and they suddenly start adding a multiple to that stock valuation, right? So, and that's really where we get these tremendous spikes in their value. So when Bitcoin starts running, at some point, people suddenly realize that the Bitcoin miners are making money hand over fist from Bitcoin running. So that is what catapults the Bitcoin miners into these extreme frenzies of huge gains. In which case they fly straight past fair market value and into overvalued. So they enter into a bubble territory where you can get a humongous amount of gain because everyone's like, oh my gosh, I got to get these miners, because they're making so much money. And then when people inevitably clue into the fact that they are making good money, but maybe they aren't making like 50 times their current valuation in terms of additional money. That's when they kind of come back to earth. But in that kind of crazy gain session, the Bitcoin miners dramatically, or at least in the past, have dramatically outperformed Bitcoin because people are more future looking with the miners. People are going, oh, if the miners are making, they made 100 million last month, they're going to make 250 million this month, kind of thing. And then they're adding a multiple on top of that. Whereas like with Bitcoin, people are just kind of looking at the price, right? So with MicroStrategy, even they're going, well, they've got Bitcoin at XYZ price, and now it's worth more money. Therefore, MicroStrategy is worth more money. With the miners, they're bringing in so much more revenue, and we need to add a multiple to that revenue to understand how the valuation of these companies, and that's really where the miners really just take off comparatively. And the fact that they have such a lower market cap means that a much smaller amount of money needs to flow into them to have them move big movements in a short amount of time. So, for example, like if people see Bitcoin go up, if Bitcoin doubles tomorrow, okay, not tomorrow, let's say Bitcoin doubles by the end of January. Okay. So it hits 200K ish. Okay. People will clue in from that January 1st report that the miners put out because they'll have made a ton of money on the 100K month. People will clue in that they will make more money this month. So during that month of January, the miners will suddenly see this big spike in their valuation because people will go, oh my gosh, they made so much money last month. They will make more money this month. And that's really what drives the value for the miners a lot more than Bitcoin itself, because Bitcoin doesn't care about its earnings, right? If Bitcoin on the first is up a bunch or down a bunch, Bitcoin itself is not going to be affected. But the miners themselves, if I issue a report showing that I paid $20,000 for an asset that's now worth like $150,000, everyone is going to be like, holy moly, this is a billion dollar thing. I need to be in this yesterday. And that's really why we see like big spikes, especially for Bitcoin miners towards the beginning of the month, where they release these updates, and the market is like, how do I evaluate them? And in that process, it often over evaluates them, which is where you can get a lot of value, because you can see instances where there's this disconnect between the actual value of how much the company should be worth and how much value the market is placing on them. So I don't think that Bitcoin mining is dead. I think that we haven't had a 100K Bitcoin month for the miners to display to really flex how much money they've just made. Whereas, everyone kind of, I think the November month where Bitcoin was up a lot, I feel like the focus was so heavily on Bitcoin itself and MicroStrategy. But now that it's over 100,000, I think that there's going to be a lot of people who are looking for value in other spaces, because they view Bitcoin as maybe more risky because it's now cracked 100,000. It's a lot of people look at the dollar amount of something and conclude that determines its risk level. And this is kind of more for real retail investors, not so much. I'm assuming quants are doing this, but like for a retail investor, the reason why a lot of people who get into like Ethereum and Solana, for example, over Bitcoin is because it's much cheaper to buy Solana or Ethereum, even though Bitcoin is, you can buy any amount of Bitcoin, right? Whether you've got $100 or $200 or $100,000, you can buy any amount of Bitcoin. But people see that $100,000 price tag and they conclude that is overvalued just because of the dollar amount, even though we've proven time and time again that things can be expensive but not overvalued. Things can also be expensive and overvalued, but again, like that's not really here nor there. So I don't think that. So to round this off, I don't think Bitcoin mining is dead. I think that it is. I think that it is moving slowly because I think that the market doesn't really quite figured out what to do with it yet. And once it does, that's when the Bitcoin miners will really start to move.
So what you're saying is meat is going to be back on the menu soon.
Well, that's the hope.
Yeah, no, I totally agree with all of what you just said, and I think that theory really makes sense. And yeah, what you said about Bitcoin hitting 100K and retail perceiving it as being expensive, that's totally true. In the back of my head, I'm always like, maybe we should just all switch to sats, right? Because at 100K, I believe that means that $1 is 1,000 sats. So 10 sats is 1 cent. So if we denominate everything in sats, then that'll make it a lot more palatable to a lot more people. And I encourage people to use sats more often instead of saying, a whole Bitcoin, because now that it's 100K, it's very intimidating, right? So yeah, I totally get what you're saying about that. Maybe just one last note. I know you shared with me a chart that you made where you compared the 2020 cycle and how miners performed with how they are performing currently this cycle. So I'm not sure if I have your permission to use that chart and insert it into this episode. If you give me permission to share that, again, not financial advice, so don't sue Tristan. But if you give me permission, I will share it with our audience, and then maybe I'll give you an opportunity to explain how you built this chart and what's the kind of overarching idea behind why you built this chart and what you're trying to represent. Because I think that it does give a lot of insights to what you were talking about earlier. So yeah, maybe you can explain that chart a little.
Yeah, so the miner one, I was reviewing the previous cycle in which I was looking at the different mining companies that were public at the time, and I was using R to normalize the percentage gain using a time frame. So I was using from November 1st. You can also do for longer, but I've been doing a shorter term review since we started the kind of bull run for real section. So I'm looking at like the normalized percentage gain for all the different stocks based on the trading day, using and then using that to kind of understand how much upwards these have moved in the previous cycle. And then I'm using that in conjunction with my other graph. The purpose of it was a Bitcoin cycle comparison where I had normalized all three of the previous the last two Bitcoin cycles, 2016 and 2020, and then 2024 presently. I had had them all normalized into the same time frame, so they're all starting on November 1st. Their time frames of November 1st, and that was basically allowing me to track again the percentage gain that was being seen by the by Bitcoin as it went through the process, and my not necessarily 100% guaranteed perspective, but my perspective is that if we're tracking a cycle, then the miners will be more likely to perform similarly to the cycle that we're tracking. And currently, based on my assessment, we are very closely aligned with the 2020 cycle so far, in which case, which it performed much more aggressively early on. And as a result, we did see a much larger gain in the miners, as we can see in that percentage gain. And to be clear, like this is these are significant percentage gains because the left-hand side axis is percentage gain. So, for example, this is suggesting that like Mara hit a 10x in January from November 1st. Now, that's not me saying that Mara will hit a 10x this year. Again, this is a different cycle. There's going to be different factors that are coming into effect on this cycle compared to last cycle. But it gives me an indication of kind of the time frames at which the previous cycle had a lot going on and had time frames where there was peaks and valleys that may be similar to this current cycle that we could then take advantage of. So, for example, like one of the things that I noticed on like these charts, for example, is relatively early in each month, there did tend to be for the miners, there did tend to be a spike earlier on. And I believe that is them announcing their results and that kind of stuff. And the market basically going, that's a lot of money you made there kind of thing. So maybe that's a factor. And then also like there's a dip in January when there's an inauguration event, because as we know for a lot of news events such as inaugurations, this is often a sell the news kind of event where there's a lot of money to be gained by selling it over holding. So it's it kind of I'm trying to basically understand what we're kind of looking at. And I think that this cycle, the miners will likely not perform as ridiculous as they did in the previous cycle, but I think that they will still perform very well. The previous cycle, I believe that the miners were pretty fresh and they were very cheap in terms of market cap. Like they were, nothing was over $1 billion. Mara was like 250 million when it started. So Mara doing a 20x was like not that crazy in terms of actual money flowing into the company. Whereas like for Mara to do a 20x now, it's like going to be bigger than Ford, for example, right? Like that would be a humongous amount of capital flowing into it. Is it possible? Maybe. But again, I'm just saying like, I think it's, I think that there's still opportunities to be gained in these Bitcoin miners. And I'm kind of trying to understand the relationship between Bitcoin price increases and the miners' performance, because that really is, they are tied together a lot. And, you know, the miners don't peak for very long when they peak. So trying to successfully sell the miners at a peak and get those really good returns is also something that is difficult to time, because you can easily miss the peak by like a couple days kind of thing. As we can see on these, they tend to peak and then move a lot. So it's very, very much something where I'm keeping track of a lot of different variables. And I wanted to keep this cycle comparison between this one and the previous one, because that also gives me an indication on when Bitcoin might start moving further up. A big spike right around December 15th is when there seems to be a much larger move up than we've currently been seeing. We've been seeing kind of like a more of a steady growth from November to now. But in 2020, we saw a big spike on December 15th, heading up into a much larger amount of money. So I'm not saying again that this is going to be how it performs once more, but if we're tracking that 2020 cycle currently, we may be seeing something similar in the upcoming months. And I think that this is, just one of the many ways you can kind of try and understand how Bitcoin will be performing in the future as well. So I'm just like, trying to understand the different ways that we can measure Bitcoin, and then we can also use that to help guide our understanding of where it may go in the current time frame. So that's really what I'm after. So it's a little bit convoluted, but I think it's indicative of a lot of different potential outcomes that we could be seeing.
Yeah, I'm not as good at like statistical analysis and stuff as you, so I don't have any fancy charts. But maybe I'll just share a personal story, because I remember December 2020. That's when Bitcoin kind of first clicked for me. Of course, I had heard about Bitcoin back in the day, but I bought like some games on Steam using like half of Bitcoin in 2015, which was many regrets on that. But 2020 was kind of the first year where it really clicked for me. And remember that it was right around my birthday. My birthday is coming up December 17th. You guys don't have to get me a gift. Don't worry. All I want is Bitcoin to skyrocket, which you guys probably all want. And, it's gonna be great if that happens, right? But anyways, my birthday, December 17th. I remember in 2020, I think this was like 1 or 2 days before my birthday, so like either the 15th or the 16th. There was a Michael Saylor interview that dropped on YouTube on this channel called Hyperchange. And if you guys know that channel, the host of that channel, his name is Galileo, or Gally for short. And he was one of the first kind of people that indoctrinated me, I guess, on Tesla. And because of his analysis on Tesla and stuff, that's when I first got into it. And then Tesla ended up doing a 20x from 2019 to 2021. So this was just kind of like in the middle of the Tesla bull run. Right after the interview dropped, that was when Bitcoin just kind of skyrocketed like crazy. So it was a birthday gift for me back in 2020. So I'm hoping to get that once again in 2024. We're sitting here December 5th. So 2 more weeks ish. We'll see what happens.